Okay, we're live.
All right. Hey, good morning, everybody. It's July 17th, and we wake up to a downdraft in the indices. The SPOOs on the left are down almost 60 points. NASDAQ on the right down almost 330. A few comments made at the RNC, Taiwan, China, and some apparently some comments about the chips. So that kind of equates to we previously had a bit of an overbought condition, and that combined, and you get a little bit of a sell-off. Anyway, so you can see the SPOOs on the left and then on the right. I mean, so now we're talking about the futures market. So all right, so we know we're down. We know what we did yesterday. We kind of traded up in this 57.18, 57.20 in the SPOOs. That was a good short area. Um, and now you wake up and you're staring at this chart with so many lines. How one makes sense of that, I have no idea. So we're gonna go do that. Wow, clarity, clarity, clarity. Okay, so let's quickly identify some areas in the SPOO. So again, we're talking about the futures. This is a Globex chart. So pre-market, this incorporates pre-market overnight. Okay, so we're right in here right now. Okay, so let's go on and establish a level there. That's right around the 57.58. That kind of coincides with a bit of a pause here on Friday. Okay, all right, so it's like, okay, interesting. Below here, we kind of get back into this area here. And that coincides with all of this, which was a base that was built before we could launch. So it's entirely possible at this point that we can go on and just trade down, open up, because we're going to open up with a gap down, a big gap down. We could very easily just kind of trade below here and trade back down into, and what I'm eyeing right here is kind of this. I mean, it's a broad area. Let's just be honest, okay? So there's that 56.47 level, 56.47, 56.50. Take 50 points off that, and now you're talking about SPX 5600. We know that that's a significant level that the bulls need to kind of maintain that level. However, if you look at all this congestion in here, it's entirely possible that we could go in and just kind of not fill in, but just kind of retrace this area. And we're going to be looking to see how this previous base area, how it holds. So don't just step out and buy like the 56, 47, 48, 50s. I mean, that's not how we trade. Um, that's entirely possible that would be a support area given that we're already down the 57 points. I concur with that. But I'll be looking for correlations in the NASDAQ and some of the other indices and a few of the techs that watching for a tech that's down heavy, that maybe there's some turnaround, watching maybe Goldman, that I would assume was going to be down pretty heavy today. It's been up like over 20 points the last couple of days. Be watching for a few of those to turn around. But this is a key area to maintain, to kind of, for the bulls to kind of remain in control. Anything below this 56.20 area, I mean, you can say hasta Luigi. I mean, we're going to go down and retrace down through here, and that's entirely possible. But I don't expect that to happen. I expect that we're going to get a lot of support in this area here, and people are probably going to take this opportunity with the sell-off to put a little bit more money to work. That's what I think. Even independent of whatever news it was, they know that people are going to vacillate on how restrictive the U.S. is with chips in China. With the relationship with Taiwan and China. I mean, those are things that have been around a while. So a number of these individual stocks or sectors will probably get just overblown into this area. So that's what the current market activity tells me is possible. Now let's see. Let's just do a quick look at this. So again, I mean, you can see these are some of the arrows from yesterday that, had we gotten up a continuation higher, if we get below this area, the possibility of a continuation lower. Here you have that, and this is Nasdaq. Here you have that early in the morning, and we traced all the way down. Notice this was an area of interest before. Notice that is a pause level. Um, and now that's kind of serving as a bit of resistance, this 2362 area. So um, the Nasdaq needs to get back over that. It needs to get back over the 2370 area to come back in here, and then it needs to prove itself right around the 20,500 area. And if it gets over there, that's when, amazing, I can use existing arrows. That's if it can get back over here, that's what it can get back up into here. But that's the Nasdaq, so that's down 300. So given where it's currently trading, 291's trading right in here. That would be about 300. That would be about a 200 point. This is about a 70 point move, and this would be about a 200 point move back up to here. That's entirely possible. I mean, that's definitely conceivable. I mean, we're down 300, we overshoot it, and then we rally 50 to 150 points. But maybe it's certainly possible we could retrace. But with that sort of news and chatter out there, I doubt that we will finish the day green. I don't. It's just like a little too negative here right now. I don't see that, but we could definitely retrace the how oversold it is now. And I don't even know if that's saying it's oversold is correct. This would be the next area down here, 20,220 that I'd be looking for. But we really just kind of NASDAQ needs to hold in this area to kind of keep the bulls intact. Otherwise, you can see these various levels below here all the way down to 19.8. That's a massive move. I don't see that, but we've had a lot of green days in a row. And when it was time for a little bit of red. So that's kind of the thought there. Let's see how that correlates to SPX. Obviously, it's going to correlate a lot. Let's get rid of this stuff. So this is an hour chart, SPX. So you see that we closed at 56.67. So we actually closed on our highs up here. So this is where your gap will be. Let's see. That's where that'll be a gap there. We are down, let's see, down 56. So you got to do the math. So 56, about 56.10. So we're going to be, let's go all the way down here. Okay, so I can see with the SPX, I can see that this was a key area here, 56.15, and we're technically trading a little below that. So I would say on SPX, even if we have a gap down, to be able to kind of maintain above this 56.15 area, and then you kind of get down into this 56.93 area here, and anything that we get below that, I mean, that's kind of your death march area down in here, and we just have to see how it trades. So then, relative to the SPX, that gives you an idea. So I think, we can trade all the way down to the 55.93, or holding above this 56.15 at the open would be key to kind of stay in this upper range. So don't chase the gap down, even though it's down heavy. It might not be a snapback right away. Look for some correlation. Look for a couple of the tech leaders or tech losers that might retrace, and I'm sure Lee will probably go through a few of those. So let me hand it over to Lee, and we'll see what sort of thoughts that he has. Maybe can he elaborate a little bit? I was kind of late to the desk this morning, so he was a little more up to date on the news. That I'll pass it back to Lee.
Thank you. Good morning, everybody. All right, let's shoot to the indexes real quick. There's not a ton to add. We're basically waiting to see what happens at market open. The news, as you saw, was to do with China. Some comments Biden made on some restrictions there, and also at the RNC. There was some China-Taiwan comments. That's kind of what caused the sell-off here overnight, as well as just some overbought signals in most of the indices, especially this guy here. As you can see on IWM, we're way outside the Bollinger Band, and just if you kind of date back to this year-long consolidation, we're kind of right stuck in the middle of that right now. So it's not surprising that we're getting a pullback just based on that, but the news doesn't help. But, you know, this is kind of typical. We're in this election cycle coming into, you know, sort of the final leg here into November. And there's going to be a lot of discussions on a lot of geopolitical stuff, a lot of things that affect the markets. But as most people know, politicians say a lot of things, but do very few things. So a lot of the stuff will be digested and forgotten about in 2 days. That's kind of what the market does. You know, we really concentrate on the things that are happening, that are realistic. So just, you know, let the algorithms kind of battle this stuff out as news comes out, and try not to stand in the way, and just ride these trends. Watch price action above everything. So what I'll be watching for, actually, this sell-off paused here, which is a daily pivot. It's a S2 pivot, which means S2 support. So that's where we paused here. And then on the, let me bring up, there's also a monthly pivot, this red dotted line right here. So this is kind of a heavy support area. If we do lose it, then obviously we'll look for lower levels. I'm not going to go too much deeper into it, because until we see some sort of turnaround, you know, I don't just want to take along just because there's a support level here. We have to look at the correlations and what's happening in the other stocks. The chips are going to be on high watch today. Keep this on one of your screens, because the market's not going to move back up until there's a bid in NVIDIA, AMD, QCOM. You know, watch one of the ETFs. You know, Soxal is one, SMH is another. Just keep an eye on that sector, especially. Keep an eye on XLF, which is the financial sector. There's some bank earnings this week, so that's important. On the individual stocks, ExxonMobil, we started that on Monday. This is looking nice. That's definitely, we entered this here around 114, and we're up around 116 and a half, or getting close, so that's gapping up a little bit. We took a position, you know, with the small caps running and costs yesterday. I just wanted to point this out. This is kind of a common pattern in these meme stocks, where they get a big pump, they come down and they settle, and then take another step up. And I just pulled up GME just to kind of show you what I'm looking for. Same pattern, got this pump, sold off, based, and then got another little rally. So we're looking for this, you know, to get up to this 15, maybe 17 area. And then the other one was Chegg, which we took a position in yesterday. You know, this chart is just completely destroyed, and these are all crap companies, but if they continue to get a pump in small caps, this could really, you know, get a decent move up here, filling up some of these gaps. So small positions, you know, just wanted to get a little piece of the action if these small caps continue to run. Uber, yesterday we took a position. Like everything, it's gapping down. This is, you know, the risk you run whenever you're swinging. But let's just see how things, let's say with no pun intended, but let's see how the chips fall when the market opens, let things settle down. And there's not a ton that I'm looking to do right at the open. I want to see how things pan out. We've been punished before when things get a little bearish and you try and jump on the bandwagon and then a big bid comes into the market. So I'm not going to be in a rush to jump into anything. Just kind of watch the price action, watch chips, see where the money's flowing. I always keep this up with all of my sectors to see, what's getting a bid. That's actually yesterday when we jumped into Uber. I had that on my watch list, and then I saw XLI getting a bid. So that was sort of identified that was going to be a strong sector yesterday. And I think Caterpillar had a huge move yesterday. Uber had a huge move yesterday. BA had a huge move yesterday. So it's definitely good to keep that on watch. Keep these sectors on watch. See where the money's flowing in for the day. And that gives you a clue, what you can look out for. And that's pretty much it. As you know, Dan is away until tomorrow, so he'll be back some point, I think tomorrow or Friday. And we're testing these lows here again. So if we break down below here, then there's a good chance we could come down here to the 56.30 level. That's kind of the next major support area I have. And this kind of went from last Tuesday, Thursday, Friday. So there is, it's not very clean looking, but there is somewhat of a harmonic looking M setting up there, which is bullish. Not very clean, but it's there. So let's see how that plays out. Watch price action, and we'll be in the room to answer any questions. Let me see if anyone posted anything here. Nope. All right. Just be a little careful today. I wouldn't be chasing short, but I'm definitely not. I don't really have a lean for the day, to be honest. It's difficult in these situations because shorts have seen these opportunities and then it gets bought right back. So let's see what happens. Watch these key levels here. This is definitely a big area. This 56, 55. So keep an eye on that. Let's see if we get a bounce back up here. And that's it.
All right, good luck, everybody. Take it easy. Don't be in a rush. Again, don't chase.